Good afternoon, ladies and gentlemen. I'm Shilpa Abraham, the moderator for today's earnings call. I welcome and thank each one of you for joining us today for the Q2 FY24 results of Punjab and Sindh Bank. Please note that this conference is being recorded and all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the opening remarks by the management. Should you need any assistance during the conference call, please raise your hand on the WebEx panel or press *3# on your phone. May I request you to please mute your audio? There is a disturbance in the line. Thank you. I would now like to introduce the management of Punjab and Sindh Bank. We have with us today Managing Director and Chief Executive Officer Shri Swaroop Kumar Saha, Executive Director Dr. Ram Jas Yadav, Executive Director Shri Ravi Mehra, and Chief Financial Officer Ms. Mahima Agarwal. I would now like to hand the conference over to Shri Swaroop Kumar Saha, MD and CEO of Punjab and Sindh Bank, for the opening remarks, after which we will have the forum open for the interactive Q&A session. Thank you, and over to you, sir.
Thank you, Shilpa, and good afternoon, everybody. On behalf of Punjab and Sindh Bank, I welcome you all to this virtual ConCall for the Q2 performance of the bank of FY23-24. The results have been declared, and the presentation has also been uploaded in the stock exchanges and our bank's website. So I'll just give a brief of what the salient features of our Q2 performance has been. The business of the bank has been at 1,98,387 crores, showing a growth of 10.85%. The deposits stood at 1,16,481 crores, showing a growth of 10.68%. The advances grew at 11.08% and stands at 81,906 crores. Within the advances, the core retail has grown by 17.93%, and the overall the yield on advances has improved by 95 bips. The capital adequacy ratio of the bank has improved further and stands at 17.23%. In fact, if we see our guidance that we will always continue with our capital optimized growth. So as far as the Q2 performance is concerned, our credit growth has been at 11.08%, while the credit RWA has grown at 8.3%. So that's how we will try to maintain the capital optimized growth going forward also. The significant improvements that has happened is also shown in the non-interest income growth, which has grown by 90.07%, which was aided primarily by recovery in rate of accounts of 131 crores. And if apart from the recovery in the rate of accounts, our core fee income has also grown at 28.43% on a YOY basis. The profit before tax has shown a growth of 53.65% and stands at 295 crores. However, the net profit had declined by 32% to 189 crores. And the important point which I'd like to mention here is that the decline in the net profit was also due to one of the write back on tax that we got of 85 crores in Q2 last year. So therefore, the net profit on a bottom line basis has gone down by 32%. Our gross NPA has been reduced by 6.23%. Net NPA has come down to 1.88%. This has been aided by good recovery and upgradation of 594 crores, and of course, good recovery in the technical write of accounts. On a sequential basis, we have also certain good improvements in the profit before tax, non-interest income, yield on advances, core fee income. Our credit cost has come down and is now at negative 0.05%. The slippage ratio has been at 0.45%. The return on assets has improved sequentially by 9 bips. The net profit sequentially has improved by 23.53% on a QOQ basis. The return on equity has improved by 175 bips, and the capital adequacy ratio has also improved by 4 bips. Overall, these were some of the basic features of our performance of Q2. And in this intervening period, as far as the technology part was concerned, the bank has now upgraded its technology platform from the core banking Pinnacle 7 to Pinnacle 10. So it will give us a lot of now leverage for improving our technology-driven growth and improving our skills and underwriting standards and monitoring mechanism. So we once the core banking Pinnacle 10 stabilizes, we expect that we can leverage this technology platform to build in new methods of lending, new methods of governance, new methods of underwriting, and I'm very sure that those developments will now get a boost. We were waiting for this big leapfrogging in our technology area, and our digital platform will also get a great boost once we are able to stabilize this basic platform. So these were some of the basic highlights of our performance of Q2. Now now the floor is open for the questions. Shilpa, thank you.
Thank you, sir. We will now begin the question and answer session. Ladies and gentlemen, we will wait for a moment while the question queue assembles. I request the participants to limit their questions to 2 per person, and please rejoin the queue for any additional questions. Anyone who wishes to ask a question may raise their hand by clicking on the raised hand icon on your WebEx panel. For those who have joined us via audio call and wish to ask a question, please press *3#. Should you need any assistance during the conference call, please raise your hand on the WebEx panel or press *3# on your phone. So our first question is from Mr. Amit Mishra. So may I request you to please introduce your organization and go ahead with your question?
Hi, good afternoon, sir. Amit Mishra here. I'm from Indus Equity Advisors. Sir, thanks for the opportunity. And my first question was on your loan gold portfolio. It has grown by 45%. So can you talk year on year 45%? Can you talk about the asset quality and yields, whatever we are getting?
Yeah, the gold loan portfolio.
Yes, sir.
Good afternoon, Ravi Maharaj this side. Yeah, basically, we are focusing on the gold loan portfolio recently. That first of all, our base was small last year. We have recently introduced this product just 1 year back, and specifically focusing on this gold loan portfolio. Reason being that's a capital light product, and our stress is very minimal in this gold loan portfolio.
The NPA percentage in this is only 0.2% in the gold loan portfolio.
Do we have any targets like in retail? We want to achieve this much of gold loan portfolio, particularly.
Actually, we are targeting a growth of somewhere around 40 to 45% growth during this financial year.
Okay, okay. And yields, sir? Yields on this portfolio?
It's somewhere around you can say 9%, somewhere.
9%. Okay. Sir, your cost to income ratio has gone up significantly as compared to last year. So it is somewhere around 72%, and last year it was around 65%. I can see there is increase in employee cost. Can you talk about that? Why is increase, 10% of increase in
Yeah,
cost to income?
yeah. As you rightly said, some of the market factors, of course, also which is impacting the cost to income ratio is the treasury yield movement. You must have seen in my presentation that there has been a depreciation of MTM depreciation of 25 crores during this quarter, which also has impacted my cost to income ratio. Apart from the repricing of the various retail term deposits that are happening, that's an industry phenomena. We are seeing a migration from the CASA to the retail term deposits, and that's a liability franchise we need to protect also. So therefore, our deposit growth has been over 10%. If you have seen, our deposit growth has been over 10% in Q2. So some of the repricing impact of our liability franchise is impacting the cost. That's how the cost of deposit has increased. And the MTM depreciation of 25 crores, that is an additional hit in this quarter, which we hopefully in going forward will get rectified in 1 or 2 quarters as the market scenario moves.
Okay, sir. Sir, what will be your exit NIMs and credit cost for whole year? If you can give us some guidance.
The credit cost, of course, was at negative 0.05%. We will continue to maintain the credit cost at below 1%. That's the overall, because what we find is that the stress in the corporate segment is virtually barring 1 or 2, which are sometimes government accounts, which are here and there at SMA 1 or 2. But overall, the corporate scenario looks pretty sound at this point of time. We had a residual stress still having in our portfolio in the RAM segment, particularly in the agriculture and the MSMEs. As far as agriculture slippages, you must have seen that our agriculture slippage at this time was a bit higher than what was last year. So because of a geographical skewedness in our branches, particularly in the northern belt of the country, we had this residual stress. However, we feel that most of the residual stress particularly in the agriculture segment has somehow stabilized or has been recognized. Therefore, the credit cost overall, we will be able to manage it below 1.51%, below 1%. And as far as the other question was regarding the NIM. The NIM, yes, it is under stress, and we are at 2.32 in the quarter. Therefore, there will be some more, maybe another quarter impact on the balance sheet in Q3. But going forward as our MCLR, because we also have revised our MCLR significantly, and those impact will be coming in the coming quarters, maybe from Q4 onwards. So that will be addressed in the Q4 results somehow. And therefore, on the financial year side, we'll try to keep it anything between 2.30 to 2.35. That would be our range in which we are looking at as far as March is concerned.
Okay, so last question from my end. As you mentioned that repricing will kick in from next quarter, as I can see, your yields on advances increased in 1 year by 100 bips, but your cost of deposit increased by almost 120 bips. So right now it's at 5.6%. Do you see any increase in cost of deposits from here?
Yeah, there will be some marginal cost, incremental cost that will be added up. See, you have to look into the perspective of Punjab Sind Bank's overall legacy. We are a bank which has a low CASA ratio, and we are not in a spread all over the country. So the pressure on our portfolio on the low cost liability resources has been as an issue which has been for a long time with the bank. we're trying to address this issue in multiple ways. First of all, we need to protect the existing liability also. So that's why we are also in the market in trying to mobilize the retail term deposits. At one point of time, we were losing the retail term base also on the deposit side. And what we find is that the retail term deposit, though it is adding to my cost, but overall, my base of my customer base is getting retained. And that's why my retail term deposits is growing over 7% or nearly 8% at this point of time, which were also not happening previous 2-3 years. We were losing on the retail term base also. So there will be some, and the repricing that happens along with the market scenario that will continue to have some more impact on the Q3 numbers. So we expect a marginal shift in the cost of deposit. But overall, going forward, we will be able to, as our MCLR repricing resets start happening, I think we'll be able to manage that part in the next coming quarters.
Thank you. Thank you so much, sir, and all the best.
Thank you.
Thank you, sir. Our next question is from the line of Ashok Ajmera. Sir, please go ahead with your question.
Sir.
Good afternoon, Ajmera ji.
Sir, my first question generally in our bank is directed to the credit growth, sir. Actually, we have been talking about it. We have a very small base of some 81,000 crore. But still, in spite of, all the assurances and also, even based on the underwriting standards and everything, somehow we are not in a position to grow the way a bank of our size should grow. Past legacy is there. That is okay in the gross NPA net. You can have some issues with the recoveries also. But on the what is stopping us to really think little out of the box and go for some good sizable increase in our credit portfolio. If you look at it, in the last quarter, it was 80,982, now 81,906. Even the corporate book, which was 40,391 crore, now is only again 40,386 crore. So as a bank, what is actually, I would like to have your comments on that. What do you think over a period of time of say 3 months, 6 months, 1 year, 2 years, where do you, how would you grow your book, and whether do you have any intent to grow it?
Yeah. So can I answer, or you have some more questions to ask?
Sir, this is very important, and then I will take some other questions also, sir.
Okay. We appreciate your concern, Mr. Ajmera, on the credit growth. Let us try to put the perspective in a proper manner. From March 18 to March 22, the bank had a lot of issues, and we had to rebalance our portfolio in terms of various capital constraints, etc. And the bank came out with certain measures which resulted in a turnaround in the bank, and the bank's gross NP had shot up to as much as 14% plus at one point of time. So, in a bank of our size and geographical reach, the bank, on its prudence, had decided to shift gear in terms of moving towards a different way of lending. While I appreciate the point that the bank is not growing in as per the expectations of the stakeholders, but let me put this also in a proper perspective, is that first of all, the bank intends to grow. There is no doubt about it. Number two, the bank intends to grow qualitatively. Number three, the bank has a constraint of growing its book aggressively regarding the cost of resources that we bear. There is no point in growing the book if my cost is not covered in my portfolio. Therefore, as a bank of our size, neither we have the market dominance to dominate the rate of interest that is being asked for by the corporates and the PSUs. So we have a constraint there, and we are willing to sacrifice our book if we do not get the returns accordingly. The other banks which are able to grow has that advantage to grow in a much more aggressively than we can grow. We can understand if you increase the book size, so we have increased the last year. If you see the quantum jump that happened last year in 22-23, where we done a 15% credit growth compared to what we were doing in the last 5 years. So I think the stakeholders will appreciate the point that there is an intent to grow. But when the market scenario moves in a reverse direction, in terms of the policy rates, in terms of the global dynamics that happen, the bank of our size need to rebalance very quickly. Otherwise, going forward, the bank again can get into a recycle mode of what happened in the previous 5-3 years, at least in terms of efficiency. So we would like to maintain our efficiency parameters in the foremost in our minds while we do our business, and accordingly we will pace ourselves. When we found that the repricing was happening very aggressively, now I cannot deny my retail franchisee the cost, the deposit rate of interest which they deserve to get in terms of market. So I should get an equivalent sort of yield from my advances. So therefore, we need to grow our RAM book very strongly instead of the corporate finances. And if you see in our presentation, this also, the corporate finance has increased 12% YOY, which is not a very bad figure in terms of what the market trends are. So there is an indication that we need to grow, but we need to grow with a high yielding advance ratio. So there's a balance that needs to be done between how much we can grow and at what cost. Accordingly, we are framing ourselves. So we don't mind at this point of time to sacrifice a bit of growth if it doesn't encourage my profitability and my ratios on the bottom line ratios. So we are expecting to, and remember one more thing, we were having some technology constraints which were which were halting our development in terms of creating new ways of lending. So now that we have done our Pinnacle 10 upgradation, we are in a position to now bring those enablers in the market for the bank as available in the market, so we can lend faster. Our LOS systems, the loan origin systems will be faster. Our underwriting skills will be much better strengthened, and of course that will help us in our digital acquisition of customers on the lending side also. So we have a host of plans which we will implement, and we will progress as for the bank's risk appetite and as for the bank's strategic thought process.
Point well taken, sir. Now you see with the digital journey also, as you said that yes, we are late and it took a lot of time. But you know, there is a lot of opportunity other than that, that online acquisitions and other things for the SME and even some mid-corp space also. But anyway, I mean, that is one thing, you know, which will keep the bank going as well as the profitability increasing, because you know, even with this 10% or 12% you are talking about, in the last 2 quarters, where do we stand? So it means on the remaining 2 quarters, I hope you will try to do it, because if you compare with the last whole year to now, but I compare from the 1st April 23 to now. So it means in the next 2 quarters, according to you, there will be good credit growth, which will take care of about 10 to 12% of the growth in the whole year.
Yes.
The point is well taken. So you only, sir, touched upon this digital journey, whereas you know many of the other banks, even the small or big banks also, have come to a very good stage they are explaining there's so many journeys have been undertaken. Out of that, so many models or modules are already ready, put in the practice, started giving the results. So in our case, what exactly is the situation? Like how many such journeys we have completed or we have put in practice, and whether what kind of business has already been started generating, or if not, then what is the timeline now?
Yeah. So a very good question. First of all, I appreciate the point on the credit growth that you raised, and we will take care on your suggestions, and we will imbibe in our strategic thought process. Number two, on the digital transformation, uh, any digital transformation of the banks that you must be seeing in the industry now was based on a strong technological platform. Digital sits on a technological platform. So the constraints that we had, we were struggling to bring those journeys as we wished we would like to bring, and try, and because the earlier the earlier version of the Finacle was not enabling this process. So now we have done it in October itself. We have given an announcement that the Finacle upgradation has happened. It requires some stabilization. You all appreciate that any such big upgradation project requires some stabilization. But thankfully, as of now, we have done it very smoothly. There are certain back-end issues which we are resolving very soon, one by one. So maybe within a month or so, we are in a position to completely stabilize the process. And we have already created journeys which we think can be immediately implemented. One such journey, of course, was the pre-approved personal loan, which we already have done it in the earlier version, which will now get a bigger, leapfrogging in the upgraded version. So the pre-approved personal loan category is in one of our main area. We like to bring these categories, such category of loans, into our mobile journeys in other areas also, like gold loan, like other personal loan, and any other schemes that we think can be enabled. We are also working on the fintechs to collaborate with fintechs. The fintech collaborations are at a very advanced stage, and we think that with the fintech collaboration, particularly, we are not doing so well in agriculture. So we are now focusing on fintech collaborations for agriculture segments, so we can generate business out of that segment. We are tying up with we are talking with big universities like in Punjab, because we have a predominant base in Punjab. We are talking one of the topmost universities in Punjab, and tying up with them so that we can think of something on a collaborative effort, because they have a lot of research work that they do, and we intend to collaborate with them and bring it to the table so that we can bring it to as part of our strategic thought process in increasing agriculture business. So journeys will be just another on the acquisition side. One of our constraints that we faced on the CASA acquisition, because today most of the banks on their mobile app journeys are also giving a host of journeys on the liability side for customer acquisition. So now particularly on the current account area, so we are now in a position to bring those methods of customer acquisition for in our bank, and we expect that by December end, max to max January end, we will be able to develop those processes so that we can bring more and more customers in our fold. What we found in our various interactions with the customers, that we have a very great loyalty quotient of customers in our bank, but because of the technology constraints, many of the customers were not banking with us. They were only maintaining account, but maybe they were doing their main business with another bank or private or a public sector. So that we would like to reverse now and give our own customers the platform which will enable them to do transaction with us, which will ultimately build opportunities for cross-selling, opportunities for various other methods of banking services. We also are now brought in the business correspondence. We have already initiated the process. We have already increased the number to nearly 700 at this point of time. We intend to bring it up to 2,000 by December and another 4,000 by March. So on that perspective also, many of our activities will get outsourced through this, which will also help in customer acquisition. And there is also a technological integration here, which will also be done on the onboarding of the bank business correspondents under the corporate BC model has been initiated. So we are increasing it very rapidly. So these are some of the enablers that the field will get to acquire more and more customers. And once my digital, what we find in our bank, that this omni-channel digital app that we have, which we call in our bank PSB Unique, is itself a unique app compared to many other banks. We are not able to leverage this because of the technology platform. It's a unique omni-channel experience, both on the net side, on the net banking, and on the mobile. Only few banks are having this in the market. So now, as I said earlier, at the cost of repetition, that once this sort of enabler technology gets stabilized, we are going to bring in more and more value-added products under this area, which will enable the bank to on a digital transformation. But overall, any transformation on the digital transformation, to answer to your question specifically on the timelines, I think any digital transformation takes about a year or so. So the period what we are looking at on a transformation perspective is March 25.
Okay, sir. Very promising,
Thank you.
very elaborate statement. Just one more in this round. Sir, our recovery in this quarter is good. You know, the cash recovery is also good, and the recovery in return of account is also good. So can you give some color for the overall year on the recovery front? I think our recovery target overall was 1,500 crore this year.
Yeah.
And coupled with that, on the other side of the asset quality, our SMA 2 has increased in this quarter to 407 crore as compared to 310 crore. So just these two questions, sir, if you can.
Yeah, our recovery upgradation target we maintain at over 1,500 crores. We have some big resolutions in the offing in Q3 and Q4, so we are very confident that target will be easily achieved. So there is no doubt about that part. As far as your SMA, yes, you are absolutely right. One of our mid segment accounts on the real estate front, 106 crore account, has temporarily slipped to SMA 2. We are confident that it will not slip, and we are going to bring it back to the fold. There are certain resolutions which we are planning on this account, and otherwise, overall, the book seems to be on a controlled environment. One account, of course, that's a legacy account which we declare in the notes to accounts, a standard NP account which is declared standard, and there is, of course, a government account which is a state government guaranteed account, which sometimes go into SMA 0 or 1 and 2. It moves here and there. So apart from that, we don't foresee too much of an issue. Therefore, our recovery upgradation target will remain more than 1,500 crores. I'm very confident that we are going to achieve those figures. And the slippages, if you are actually hinting at what would be the expected slippages for the current year, overall, we feel that we'll be able to maintain the slippages as at the level of last year, which was around 900 crores. So we are on an annual basis. So that is what we expect to keep it at that level.
So you mean to say on slippages, I think in the last 2 quarters, we already have about 791 crore, isn't it?
Yeah, but if you see the half year figures, that slide that shows the half year figure, which is at 563 crores, I think.
Yes.
Huh?
Yes.
So the half year figure is 563 crore. That means what has slipped in June quarter, we were able to recover very aggressively in September.
Can you repeat the half year figure, sir? Can you repeat the half yearly figure, sir?
Yeah, 563 crores. It's in my slide number.
Okay.
I'll just tell you the slide number. 17. See. Please see slide number 17.
Okay, sir. So it means that
it is 653. My mistake. Sorry. It is 653. Yeah.
653.
Half year.
653.
Yeah. My Allah. 538 was last year. Sorry, I got it.
So the net effect for the next 2 quarters, maybe around 250 to
net slippage. Yeah, that's what you're saying. Net. because some of what has been slipped in September or has already been recovered in October. So this trend continues. So the net we expect slippage minus recovery another 200, 250 odd crores.
So this one construction
So,
account of 106
sorry,
crore, you don't expect
apology.
to be slipped. Hello.
Apologies, sir. I would
No,
request
just
you to
continuation of
please,
my. Hello.
sir, apologies, sir. I request you to please rejoin the queue for additional questions. Sir, we will move on to the next question from Mr. Amit Mishra. Sir, may I request you to please introduce yourself? I think his line has got disconnected. Sir, I have a question on chat from Mr. Bimal Panchal from Bimal Panchal and Associates. His question is, has management received any communication or indication from President of India, promoter of the brand, regarding any dilution of their holding?
No, not yet.
Thank you, sir. Our next question is from the line of Mr. Sushil Choksi. Sir, please go ahead. Sir, we are unable to hear you. I think Mr. Sushil's line is having some issue. We will come back to Mr. Ajmera for his additional question. Sir, please go ahead.
Yeah, so continuing our discussion earlier, sir, we were talking on the. Hello, can you hear me?
Yeah, please carry on, Mr. Ajmera.
Yeah, we were talking on these slippages, and you said, yeah, this is under control, and only net it may be 250 to 300. Does it mean that? I mean, you are sure that 106 crore construction account, which is in SMA 2, will not slip only, isn't
That's
it?
what we are confident about. Yes. It's a project under implementation. I think the last mile activity is going on the implementation. We are expecting that some resolution, at least will happen. Not a resolution in terms of restructuring. I'm saying in terms of bringing the account back to its normalcy. I'm talking of that resolution, not a restructured resolution. I'm saying so some sort of a thing. We are very sure that it will not slip. We'll be able to maintain its at least SMA 1 and 2 category. It will move on till the project gets completed. It's a real estate project, housing project, which for some reason got stagnated. Now the production is going on. It will end at some point of time, and once the project is completed, I think the revenues will come in.
Okay, sir, that's good. Sir, a few things on this profitability, like wage revision provision. Where do we stand? Have we provided for fully, or what is
we are providing at 12% now?
Pardon?
12%.
12%. Okay, sir. Sir, on this.
And one more thing, this is for everybody, because you have raised the issue of the provisions. I can just add here, which I forgot to tell in my opening remarks. In this balance sheet also, we have provided additionally 80 crores towards aging provisions and some other accounts. So overall, we are building up the provision coverage. So we are already for the December quarter, the aging provision has been provided in this September itself. And we have also provided another 40 odd crores in certain accounts. So overall, we are provided more than 80 crores additionally in this quarter on the NPS side, apart from the wage revision of 12%. Yeah, please carry on, Mr. Ajmera.
Sir, on this other operating expenses, of course, I didn't see that slide in detail, but it has gone up comparatively to the last quarter from 206 crore to 251 crore. Any special account?
If you see in the same slide, Mr. Ajmera, I just like to bring your kind attention to the same slide on the half yearly figures. You will find that the other operating expenses actually gone down by 3%. So this happens in a in a September quarter. But overall, if you see on a half yearly basis, many of the expenses are actually booked in the September quarter due to some routine expenses that are get booked. But if you see a half yearly YOY, that has gone down by 3%. I think that is the comfort that we draw.
So, sir, on this technology front, the digital journey and this thing, they are generally how much is the capex? What is the percentage of the capex and P&L? Are you putting something more in the to the P&L? Some part of this expenditure?
See, there are two parts of any technology expenditure. One is the capital expenditure, one is the revenue. So far, we have been when the technology upgradation in terms of bringing the software and hardware, etc. And we had a plan of around 250 crores of investment in the line, which were projected there, and accordingly we have invested there on the capital side. Now that the revenue as the AMC will start from now onwards, as we have moved into the implementation, so some sort of revenue expenditure will continue to occur in terms of this technology upgradation, but which is a balanced figure which we can make up. It is not a big deal for the bank.
So coming back to, I think you had given an answer for this lower NIM to 2.32%. So can you where do we see our NIM to be, and what could be the how can we increase the NIM? Which are the composition on which you are working of the various the lag effect on the whatever is your rates and everything. So is there any calculation done for the NIM, and where would we be at by the end of this year on the NIM?
See, as I said, I've already given this figure. We'll be trying to be at anywhere between 2.30 to 2.35 by the end of the year. And as to answer your specific question on where this NIM will improve, yes, we have identified the assets. Particularly, see, corporates we cannot compete. Let us be very honest about our position in the industry. PSUs are asking rates at much below the rate which I cannot tell in here in the open market, but you all know what is the demand from the PSUs in terms of the rate war that is going on in the market. So we are not there. We have tried something. We thought that we can increase the book on that side, but however, we find that it is not getting cost effective. So we have retraced our steps on that. And now we need to go into those areas where we are getting higher yields. And so the main focus, of course, would be RAM. And we have been increasing the RAM. If we increase the onward lending to NBFCs, if you see that slide, it has increased to over 53%. So that is where my yields will come from. We are also improving our co-lending. We have already increased the book to 1,500 crores at this point of time. We are going to increase it further. We intend to bring it to around 3,000 crores by the end of March 24. So the co-lending will get attraction. We are preparing our technology platform for SI pool purchase. So once that happens, we'll have attraction in that area also. Maybe a bit more time is required in terms of the technology setup that requires to be done. So we'll focus on the gold loans, the personal loans, where we get better yields out of that. The MSMEs, of course, again, is a big focus. We have increased our GST product, which is on a cash flow based. We are providing up to 5 crores. So that is giving good traction on that product. And it's a very popular product in the bank. So we expect that the yields will improve in that area. So we have internally strategized on various segments, how much to do it for housing, how much for vehicle, personal, education, gold. So internal targets are fixed so that it all impacts my NIM. But because of the interest rate sudden that has happened, see, we were all expecting a repo rate cut happening sometime this year. Now we all know what are the circumstances in which we are in and how that is getting delayed. So that factor is also impacting us. So if we had factored in a bit that in Q3 or Q4, we'll get a rate cut benefit, which will impact beneficially the bank's overall balance sheet. But because of the global factors and the factors of the international standards of the monetary policy committees, there has been a delay in how the rate cut will going to translate in India. We are moving into a prolonged pause now. So again, we need to just hold our horses, and the MTM depreciation has happened. The another war situation has been created in Europe, that is also impacting in some way the various decisions that need to be taken. So these are some of the global factors that also impact a bank, and a bank of our size and balance sheet. The factors get a bit of aggravated in that fashion. So we are confident that this year, though, we will try to improve our credit growth, but in face of the various factors on the low cost liability resources, maybe we are looking for a better year ahead, when the market also helps us with the treasury. That the treasury will also rebound, I'm very sure, from Q1 next year, which we are expecting. Some traction will happen. So once that traction happens and the treasury also supports the bank in the way it has supported earlier, we can have a much more better performance in next year, 24-25.
Yes, sir. Sure, sir.
Thank you, sir. Sir, apologies. May I request you to please rejoin the queue? Our next question is from the line of Mr. Sushil Choksi from Indus Equity. Sir, may I request you to please go ahead with your question?
Can you hear me, please?
Yeah, there is some echo, Mr. Choksi.
Sir, your voice is echoing.
1 minute, 1 minute.
There is an echo.
No, I had joined from two instruments, so I just waited. So my first question, I had a good history class about Punjab and Sindh Bank.
Cannot hear you.
You can't hear
Sir,
me?
we cannot hear you. May we
1 minute,
request
just
you
hold
to
on.
please join from one.
1 minute, I'll hold on, I'll join.
Sir, please give us a minute, please. Mr. Choksi, we cannot hear you. The sound is echoing again. May we request you to please place your question on the chat so that I can ask it on your behalf? Mr. Choksi, can you please message us or WhatsApp us your questions on 790-743-1859? Apologies for the inconvenience. Thank you for the hold up. Thank you, as we are unable to get in touch with Mr. Choksi. With that, ladies and gentlemen, as there are no further questions from the participants, we now conclude this conference. Should you have any further queries, please reach out to Ms. Mamta Samant at 9930625104 or mamta.samant1@dentsu.com. Details are mentioned in the WebEx chat and the analyst invitation sent to you earlier. On behalf of Punjab and Sindh Bank, I thank each one of you for joining the conference today. You may now disconnect your lines. Thank you and have a good weekend.
Thank you all.